Some of the risks with public banks are, of course, they're public entities. So the governance of them, you have to be careful. You want these institutions to be transparent and accountable. So there are risks, like in any public institution, that they can be captured or used for political purposes. And public banks, because they command control over money resources, you have to be especially careful of that. Because they're dealing with money, you have to be careful with the deployment of that money. You can build up financial risks in terms of the types of loans you give out or the credit programs. You need to keep an eye on its books. Public banks can't solve all problems. They can give credits and they can support industries both when they're in need and when they're expanding. But you don't want to drive a public bank into the ground by simply lending without regard for the payback of that loan. That does link to the question of what kind of support does it have? Is that bank backed by the government? Does it have official government guarantees? So the German KfW has an explicit federal government guarantee that bank can't go bust. It can never go out of business unless the government shuts it down, but its loans are backed by the German government. There are other institutions, for example, the Banco Popular in Costa Rica. It doesn't have an explicit government guarantee that the government will cover any potential losses or help it out should it enter into some sort of moment of instability or crisis. But it has an implicit guarantee, meaning that given an economic crisis in the country that directly impacts banks, often the worst, the government can step in and has stepped in to support that institution by absorbing some of the loss. I think the two biggest risks that you have to be careful for when you're talking about public banks, one on the government side, who's running the bank? Is that accountable? Is it transparent? And two, how is that bank deploying its resources, which are public resources, public financial resources? And does that have a sustainable long-term model that isn't going to drive that bank into the ground? Because they're legacy institutions, right? These are institutions owned by and for the people of a given country. And you need to take care of that as you would any other natural resource or important natural institution. And so you really have to create the conditions by which these entities can remain sustainable for the long term. That doesn't mean profit maximization. It just means financial sustainability.